Good afternoon and welcome back. Hope everyone is having a good long weekend. Today is Memorial Day, so it's important that we have our time of reflection and remember those who have paid the ultimate sacrifice so that we can enjoy the freedoms that we have today. So, yeah, it's a day of remembrance, and for all those that have fallen for our ultimate benefit and all that, just want to say thank you. We are blessed to be in this wonderful nation that we are in and to be in the position that we have compared to a lot of countries and a lot of individuals out there. So with that being said, look, we got ourselves a short week, but it is a loaded down packed week, and that's coming from not just the economic data side, but also NVDA earnings are this week. It is the last major player to report earnings. And yeah, with that being said, let's just go ahead and dive in. Of course, we want to start out by looking at the economic calendar, and then we'll progress to NVIDIA earnings, which is the big elephant in the room. Everybody's going to be watching it, so we should spend some time at least looking over it and see what we can expect as far as the earnings report. So let's just go ahead and dive into the economic calendar as provided by investing.com, a great resource to check out, especially for the economic calendar, which I use all the time. As you can see, Fed chairman spoke yesterday, but he didn't make any comments on the economic outlook, so nothing came of it. Yay, whoop-de-doo. Moving on. Today, of course, the holiday, nothing going on as well, although futures are open right now, and as you can see, if we take a peek here at futures, yes, even though the cash market is closed, futures are open, and we did get a nice little pump to start things off last night during the overnight session, and we've kind of stabilized here, and that comes from our good old buddy Trump, the tariff man, who made a little bit of a deal with the EU stating that, okay, we aren't going to increase tariffs until July as opposed until June, which was in a few days, so it was getting a little bit dicey, and that is why the market is running right now on the overnight session. So it is low volume, especially when you come look at the daily time frame. I mean, that is a tiny blip as far as volume goes compared to what we see day in, especially during the cash market opens. Very light volume. We'll see if it sticks, especially since it looks like we are going to be closing above Friday's open. So that could be a positive signal there. Good little reversal pattern. We'll see if we get some follow through. So on the ES, if we get a break above 5,900, sure, maybe we can retest 6,000 this week. Who knows? Especially with all the economic data going on, we shall see. But like I said, overnight move, especially with the holiday, it's just low volume. I'm not going to read into it too much, but we'll see how we get some follow through. But yeah, moving on to Tuesday, we have a few minor things that we need to pay attention to for tomorrow's cash market open. We got a few Fed speakers sprinkled in throughout the day, but definitely our main thing is going to be our durable goods orders, which we could see if any surprise could indicate a stronger or weaker demand for longer lasting goods. So that is something that we need to pay attention to. We also have the S&P Case-Shiller Composite. This is another housing data, which last week we got plenty of housing data if you want to go back and look at that. Some kind of minor here, to be honest with you, but at 10 o'clock we do have our consumer confidence reading, and we do have Atlanta Fed GDP now. This can be a market mover that comes in at 11:30, and we do want to pay attention to this two-year bond yield, two-year bond auction at noon. So a lot of big things here on Tuesday, definitely keeping us on our toes. Moving on to Wednesday, Just a few Fed speakers, nothing really to take note of. The only thing that we could, pay attention to is the FOMC minutes, which is getting released at 2 o'clock. Again, this is just the minutes. There is no Powell. This is just basically their report that that they released later on about their previous meeting, and it could provide us more context into the Fed stance on inflation and the economy. It could provide some kind of spark, but usually the moves are kind of muted, especially with just the Fed minutes. There is no Powell. So we'll see what happens with that. Maybe we'll get some elaboration if they are worried about stagflation, which we did get a little bit of that S word on some of the Fed speakers last week. So we'll see if we can get some more context as far as that goes. Moving on to Thursday, we got our jobless claims. We got a few more Fed speakers, but our GDP getting released at 8:30. That's going to be the big one. Our prior reading was minus 0.3%, and a lot of economists were saying that's just a fluke because of all the tariffs and all that. A lot of companies front ran it and all that, and it just hasn't shown up in the data yet. So if we get another negative GDP reading, that could signal that, yeah, our economy is teetering on the edge of a possible recession. But if we get a sharp increase in that GDP report, because not the past reading. The past reading was minus 0.3%. The reading before that was an increase of 2.4%. So you can see we had this drastic, sharp fall off between 2.4% to minus 0.3%. We'll see what the data tells us. It's going to be a very, very important one on Thursday. Not to mention we got PCE prices, our jobless claims. We've got a few Fed speakers. But yeah, that GDP is going to be very, very important. Moving on to Friday, we get our core PCE index. This is the Fed's preferred inflation index to be looking at. 0.1%, slight uptick from the previous 0.0%. A reading at or below the forecast can ease inflation concerns, and it's just, it's one of those important readings that we need to pay attention to, needless to say. Chicago PMI, definitely important. We want to see if manufacturing is healthy, which is, in other regions, it's been kind of sloppy and on the decline, so this will confirm or negate all those other readings. And then, yeah, we'll see. And then we also have the Michigan consumer sentiment and expectations to close us out on Friday. So there you have it. We have a huge data week, from important inflation data to consumer health to labor market indicators, PCE, GDP, home sales data with the Case and Shiller, Fed speakers sprinkled throughout. Powell didn't really say anything on Sunday. Nothing really too crazy on that. Yeah, very, very heavy week. And not to mention, yeah, let's go ahead and jump to it. Let's talk about the big elephant in the room, and that is NVDA earnings coming up. We are expecting 93 cents on $43.4 billion in revenue. That would be a 76.3% increase on the year-over-year numbers. The market is expecting about a 6.6% move. According to TOS, that would put us at about a plus or minus 9 points. Now, sitting here looking at the NVIDIA chart, we can see that we haven't made too much progress since we hit our double top here at all-time highs around the 153 mark. But if we look left here on the chart, we're basically at the same prices that we were at last year, this time last year, just about. So all in all, NVIDIA's just, it has some good days, it has some bad days. We're just not breaking out into new highs. We're not breaking down either. There is a big support level here down at the 95 zone. So if we come back to retest this, I imagine it holds. But if we break down, it could suggest, you know, maybe the stock is damaged goods. Maybe there's something other things that we need to be concerned about. But we do have a slight resistance level here at the 136.50 mark. Above 136.50, sure, we can retest these highs at about 153. But again, like I said, if we zoom out here, we can see that we've had this big run to the upside, and we just kind of stalled out, and we're just waiting on a new direction. And as you can see, this is just a clean chart. There are no crazy momentum indicators, not even the ones that I use or the ones that I've even built. This is just your plain old candlestick chart, and based upon the levels, and you get this very clear picture about what is really going on. Now, that's not to discount, you know, the strong power of NVIDIA and their earnings. As you can see, quarter over quarter, they continue to beat. Their revenues continue to soar. Their data center revenues, you know, last quarter were well over $35 billion, and their data centers continue to be very, very impressive. There were a few concerns the last earnings report, and that was due to rising cost of AI infrastructure, regulations and controls, especially for their AI chips and China. We need to see how that is going, and we know that they've been working on getting new chips out to China that meet the requirements of the law. And then also supply constraints. We all know about how that's been going on. And no doubt about that, the overall macroeconomic situation and uncertainty that has been hammering us, even us investors and traders, have been the headlines have just been pounding in and out, good, bad, back and forth. We'll get some more clarity from the CEO, and we'll go from there. But yeah, expecting a good beat again on NVIDIA. We'll see how that goes. Again, those earnings are reported on what was that, Wednesday, Thursday, Wednesday. So yeah, be on the lookout. Wednesday is a big day, not just for economic data, but as well as NVIDIA earnings. All right, let's move on to the charts. That was a lot, and that's just covering NVIDIA earnings and the economic calendar. So I apologize if that was a little long-winded, but let's get to it. Let's look at the SPY here, the daily chart. We've had this big move to the upside, stalled out a little bit around this 600 mark, and we pushed lower. We finally got ourselves a little bit more of a pullback last week, and we did get a little bit of a move towards this minor gap down here, but nonetheless, the market bulls defended the area, and we closed back above this 577 mark. So again, if we start to move below 576, we could get a small gap to fill. There are a few other gaps that we need to be mindful of down here at the bottom, but for now, SPY continues to hold where she needs to, and the market seems to be on still in a bullish positioning, although the momentum has definitely cooled on these smaller time frames. As we can see here, like on the 1 hour, you can see that, you know, things have just been pulling back. If we look at the 30-minute, you can see that even clearer, and so forth. As you drop down to these smaller time frames, how that we are experiencing that slight momentum shift and a cool down as the market breathes. And it's important for the market to breathe. You want the market to pull back a little bit, gather its footing, and then push up. It's not healthy for a market to go parabolic straight up. It needs to breathe in and out, guys. All right, moving on to the Qs. Kind of the same thing here on the NASDAQ. We hit our heads here at about the 522 mark. Couldn't quite, you know, get above that. But like I said, the market's been on an incredible run off the April lows and putting us into a new bull market. But yeah, support down here at the gap at around 501.50, give or take. Below that, sure, there's a gap to fill, just like on the SPY. But overall, you know, same thing. It's very much so a bullish reading, but the intraday timeframes have cooled down, and you're going to see that across these indices. The Dow and the IWM, they got some work to do, especially the Dow. The Dow has been struggling, I would say, mainly due to UNH, United Healthcare woes continue. Look, United Healthcare, they had a great move off this hammer candle to the upside, and now it's pulling back. Like I said, it's tough to to buy these things. I don't see this as a complete turnaround move until we make some sort of higher high. But nonetheless, UNH is having its impact on the Dow components. Moving on to the IWM, could not get above the 210 level, and that's going to be the big level there for the IWM. We can mark this level here and zoom out, and I'll show you what the deal is. Let's put that 210 mark, and let's zoom out here on the IWM. Look at this. This was our breakout level back in 2021. We held it, and finally broke down, retested it, pushed back lower as resistance, came back up to it finally last year in 2024, rejected, finally broke above, and we hit our heads again around this 244 mark, flush back down, and now we're back at this 210 mark. So the IWM chart, small caps, they're struggling. They're not doing anything at the moment. There are way better things to be involved in, and it is definitely not small caps, and they are definitely more susceptible to higher rates. Speaking of higher rates, if we look at the TNX, 4.5%. When this 10-year gets above 4.8, then I'm a little bit concerned. I'm more concerned. I know higher rates have been a cause for some of these downward pressure moves, but as it sits, 4.8 is my level in the sand, especially 5.0. So yeah, that is going to be that's more of a macro picture here. Moving on to our individual sectors, we do got some leadership, within the XLK. Microsoft continues to be very strong here, but we need to get that break above 457.26. Broadcom continues to look pretty good, but like I said, we just need to break out. We need to see if these moves can, just obviously just push out and go. 238 is your key move there. Obviously, we have NVDA earnings coming up, which we've already talked about, so I don't want to elaborate even more on that. Let me go to my notes here so I can give you all of my goodies that I've been looking at. All right, so we got Apple, Apple, part of the XLK sector. This is also a lot of back and forth with the tariffs. One day Trump says something, and then the next day Trump says something else, and then Apple goes down. So that's where we are at with Apple. If Apple starts to lose 193, we could see a push down to 185. I'm leaning more on the bear side here. For Apple, it's just kind of struggling. There's too many news involved, and there's not too much good tariff news. It's just Tim Cook versus Donald Trump. So if you want to play with Apple, just be very mindful. It's very news driven. Let's go over to Palantir, a market favorite for all retail investors. 125, we got that breakout 2 weeks ago, and now we've come back through, and we can't seem to get back above 125. So if we can get back above 125, we're looking at a new all-time high push on Palantir. However, if we start to lose 119, we got a little bit of support here. Lose 119, we could see a move back towards 110, 108, and then below that, retest of 100. But the fact that we haven't been able to get back over 125 is a little bit concerning, because that means it's starting to reject these higher prices up here. Moving on to ServiceNow, just needs to get above 1045. That's another beautiful setup that I am waiting on here to see if it'll break out above. Now, moving on to industrials, another good sector that has attempted to break out into all-time highs and has been leading the way, especially compared, to something like semiconductors, which has been kind of slow outside of Broadcom, really. XLI continues to be impressive. You got names like GE, looks like a bull flag to me. If you get this bull flag breakout over 236, man, this thing could go 240, 245. You even have GE Verona, all-time highs here as well. All these General Electric components seem to be breaking out. You have Uber, which had this all-time breakout over 87. You're getting that retest of 87 now. We'll see if we get that push back up into the 93 level, but 87 has to hold. Can't stress that enough. 87 has to hold. Then you have John Deere, all-time high breakout, kind of fading. It's got to get back over 515 and confirm these higher prices, if you ask me. Some of the weaker names, though, UPS, we have longer term support down here at the 87 mark. Let me zoom out, way out. Going back to like 2014 long term support. 87 long term support could be a good buy area. Just need to see it confirm these zones. But as it sits, this is a downtrend through and through. You also have HWM, part of the industrial sector. Howmet Aerospace continues to be impressive at all-time highs as well. Some of these lesser-known names look really, really solid. Moving on to the communications sector, let's go to Meta. Meta needs to hold 621. Below 621, we could see 600. Google, not really impressed with Google's price action, to be honest with you. EA Sports, it's in the game. That is not EA Sports. That is something else. EA had this nice little breakout 2 weeks ago. Now it's retesting the 146.50. Would like to see 146.50 hold. If it does not, then we could see a push back down to 142.50. But if 146.50 does hold, we could see a move back up to about the 152s. So that's what I am looking at over there. Moving on to consumer staples, Walmart needs to get above 100, plain and simple. 100, you get your gap move towards 105. Then you got Dollar General, who's got this nice little breakout move, 97. Just needs to see 97 hold. Maybe we get ourselves a little bit of a bull flag and continue to fill some of this big gap out. Higher risk, but as long as you got this 97 to hold, I think you're in a pretty good spot there for Dollar General. Moving on to utilities, my favorite name is Vistra Core, getting this nice breakout above 157. As long as 157 holds, we did get that push with higher volume over 157, looking for a push towards 176. So a lot of potential movement here on VST. I like it a lot. Breakout over resistance with increased volume. Moving on to financials, Schwab is your key leader here. All your credit card names like Visa, they've all kind of fallen to the downside. Visa, MasterCard, they all look the same. Burke B has been pretty quiet since the investor day and people just digesting the potential new CEO, which has been confirmed, as well as Buffett stepping down. Needs to hold 498.50. If we start to lose 498.50, sure, we can see a little bit of a push to the downside. But overall, hard to beat against Berkshire for sure. So it feels kind of dirty. And then CME, as far as the financial sector, needs to get above 286.50 for an all-time high breakout. And then as far as our odds and ends names, I know you're probably, saying, come on, Carvana, possible bull flag, needs to get above 305. Spotify needs to clear 660. You have GameStop, which does have earnings coming up, getting that pre-earnings move, breaking out over 29, has more wiggle room to 34. Crowd also has earnings this week, trying to have an all-time high breakout over 455.50. eBay holding its breakout of 71.50, and CCJ bull flag breakout. Look at this thing. This thing is absolutely beautiful. We mentioned it last week, and you got that breakout, and you could have room to about 62 or so. And then Boston Scientific, just looking for a move over 107. But there you go. Again, let's recap. I know that was a lot, so let's just dial it back in. I just gave you a bunch of tickers to look at for your own benefit or for your own good. Those are the names that I'm looking at and keeping an eye on. But let's recap. We have a lot on the table for this short week. Lots of economic data. Check in on the mornings, see what's going on, see what you need to be aware of, what the report was, and how the market responded, if at all. And then, of course, we have NVDA earnings on board for Wednesday, expecting 93 cents on $43.4 billion in revenue. We want to see good data center numbers. We want to see good chip readings. We'll see if they've regained some of the gaming, their gaming revenue, which fell off last report, but they've been solely focused on AI and AI infrastructure and all that kind of good stuff. So be on the lookout for that. But all right, that's going to be it for me, guys. Y'all have a good rest of your day. Again, trade safe, trade smart, be good, and I will see you all later on. Take care. Bye-bye.